In 2019, Saudi Aramco set a record by raising $29 billion in its public debut. By June 2026, a private rocket company plans to nearly triple that record, seeking $75 billion from the public markets. This diagram scales that valuation against the market. At a target of $1.75 trillion, this single entity carries a higher value than almost every legacy aerospace and defense firm in the S&P 500 combined. Manufacturing and selling rockets cannot generate these numbers. The industrial mathematics of spaceflight simply do not scale to a trillion-dollar valuation. Instead, this IPO represents a pivot in how we value the cosmos. The focus is shifting from deep space exploration to owning infrastructure connecting everything on Earth. To understand why a rocket company carries the price tag of a tech giant, we have to look past the hardware. Traditional aerospace relies on slow government contracts and thin margins. Look at the 2025 financials. The top line shows revenue peaking at an estimated $15.5 billion. That represents a 63% increase in a single year. The anomaly is the operating profit, roughly $8 billion. This 50% margin is common in high-growth software, but it is effectively non-existent in heavy aerospace manufacturing. Maintaining this trajectory requires more liquidity than private Silicon Valley venture capital can provide. The company has effectively outgrown the private sector. To secure the $75 billion war chest needed for global expansion, they are turning to the public markets. The IPO marks the transition from a venture-backed disruptor into a publicly funded sovereign utility. The driver for this valuation is a global internet utility. Their satellite network now generates the majority of the company's income. In September 2025, they committed $17 billion to acquire EchoStar, a move that clarifies their long-term intent. They acquired EchoStar's AWS-4 and H-Block spectrum licenses, the specific radio frequencies required for mobile data transmission. These licenses provide authority to deploy a direct-to-cell service, projecting 5G connectivity from orbit and erasing dead zones. Because smartphones can communicate with satellites like cell towers, the company is positioned to absorb legacy mobile networks into an orbital grid. A large portion of the $75 billion raise is earmarked to fund this terrestrial telecom buyout, officially turning a rocket manufacturer into a primary global internet provider. This telecom rollout connects to a larger architecture involving the April 2026 launch of their newest rocket and the multi-billion-dollar merger with xAI. The Starship V3 vehicle is designed to haul 200 metric tons of payload to low Earth orbit in a single flight. That mass capacity is the missing link for xAI, which builds dense, high-performance artificial intelligence server clusters. The plan involves using Starship to deploy modular server racks directly into orbit, creating a network of space-based data centers. Earthbound data centers are limited by land availability and enormous power requirements of the electrical grid. Orbital compute bypasses these physical and regulatory constraints. The IPO finances a compute network that functions outside the physical limits of any single nation, creating a new layer of global digital infrastructure. The IPO structure itself is designed to pull in as many individual investors as possible. While most IPOs are dominated by banks, 30% of this $75 billion offering is specifically reserved for retail investors. Leveraging retail enthusiasm is a strategic necessity to sustain a $1.75 trillion valuation once the stock begins trading. This leads to a difficult question. Is this an opportunity to own a piece of a new utility, or a method to offload the massive financial risks of space infrastructure onto the public? Regardless of the motive, retail capital is being used as the primary engine to build this new orbital utility layer. Saudi Aramco built its empire on oil, the foundational physical fuel of the 20th century. This IPO is built on the foundational digital infrastructure of the 21st century. We are witnessing the privatization of low Earth orbit, funded by the public to build a web that envelops the planet. Every share represents a stake in the toll booth that will control the flow of future internet traffic and artificial intelligence.